Imagine having a direct line into the latest financial pulse of a global tech company. You get the critical insights, without having to wade through pages and pages of documents.
Yeah, cutting right to the chase.
Exactly. And today, we're doing just that. In this deep dive, we're cutting through the noise of Mphasis Ltd's Q1 FY26 results to bring you the most important nuggets of knowledge.
Sounds good.
We're going to explore their financial performance, their strategic moves, and really how they're riding this huge wave of AI to unlock new opportunities.
And our info is straight from the source, right? The investor presentation, board meetings.
That's right, direct from the company. Their investor presentation, the board meeting outcomes, and the official press release for the quarter ended June 30th, 2025.
Perfect.
So if you're looking to quickly get informed on, say, the strategic direction of major IT service providers, or understand how market dynamics are playing out, or maybe you're just curious about how a company like this navigates, a constantly evolving tech landscape,
Then you're definitely in the right place.
you are. Let's unpack this.
All right, a lot to cover here.
Okay, let's kick off with the headline numbers then. What's the overall picture of Mphasis' financial performance for this Q1 FY26?
Well, the phrase they're using is sustained execution. So looking at the numbers, gross revenue, it grew 1.4% quarter over quarter,
Okay, pretty flat QOQ.
but 9.2% year over year on a reported basis. Now, in constant currency, that's a bit better, 1.0% growth QOQ and 6.5% YOY.
Right, and direct revenue. Sometimes it tells a different story.
It does, yeah. Direct revenue showed stronger growth, actually, 1.1% QQ and almost 11%, 10.9% YOY reported.
Okay.
And in constant currency, that's 1.6% QQ and 8.1% YOY. So definitely a bit more momentum there in the direct business.
Gotcha. And the bottom line, net profit.
Net profit came in at 4,417 million rupees. That's actually a slight dip, 1.1% down from the previous quarter.
Okay.
But compared to last year, it's a healthy 9.2% increase YOY. And the earnings per share, the EPS, followed that trend. No, at the 23.2, down 1.2% QQ, but up 8.5% YOY.
Okay, so the immediate numbers show, like you said, stability, some growth, maybe a slight sequential dip in profit. But what's the real standout here? Something that points more towards Mphasis' trajectory, not just the last 3 months.
Yeah, that's the key question. And the fascinating thing here is their highest ever total contract value wins, the TCV.
Ah, the TCV. Always a big indicator.
Exactly. In a single quarter, they hit USD 760 million just in direct deals.
760 million.
Yep. And this isn't just, a big number for the sake of it. TCV represents future revenue commitments.
Right, it's book business.
Precisely. Landing a record TCV like this, especially now, points directly to, well, very strong future revenue potential. It suggests they're capturing significant market share, even with, the broader industry headwinds we hear about.
That is a truly remarkable TCV figure, especially given the current climate.
Yeah.
It really does seem like AI is front and center for Mphasis now.
Yeah.
How is their strategy, the one they call doubling down on AI, how's that actually playing out in these results?
Oh, absolutely. This is where it gets really interesting, I think. AI isn't just a buzzword for them. You can see it's tangible in their pipeline, in the deal wins.
Okay.
Get this. A massive 68% of their entire pipeline is now AI-led.
68%? Wow.
Yeah. And that figure, it's not just a number, right? It fundamentally signals a shift. Mphasis is moving from maybe a traditional IT services provider towards being an AI-first transformation partner. It shows where the real client spending power is now.
So it's becoming the core driver, not just an add-on.
Exactly. It's the dominant strategic driver. They've actually achieved their largest ever pipeline overall, and it's significantly driven by their Mphasis AI platforms.
Right.
And if you break that down a bit, their banking and financial services, or BFS pipeline,
Right.
is up 47% year over year.
47%, okay.
But the non-BFS pipeline, up an impressive 108% YOY.
Double. Wow.
And even their large deals pipeline, the really big ones, that increased 40% just sequentially from the last quarter and 154% year over year.
Okay, that massive AI-led pipeline certainly indicates strong interest, strong demand. But how are they converting that? Turning interest into actual signed deals. What specific initiatives are driving that flow?
Good question. Because pipeline is one thing, closing deals is another.
Right. And, with such a heavy reliance on AI for the future pipeline, does that maybe introduce new kinds of risks, like the tech evolving so fast, or maybe clients not being fully ready for these deep transformations?
Definitely valid points. On the conversion front, they've been quite specific. They launched the Mphasis.ai business unit,
Yeah.
sort of a dedicated focus area.
Love.
They've got a Gen AI foundry with AWS, which sounds like a collaboration hub. And they've formed a specific strategic engagement team just for pursuing these large
Right,
deals.
focusing resources.
Exactly. Plus, they highlight their own platforms, Emphasis, NeoCrux, and NeoZeta. These are geared towards AI-driven modernization and the software development lifecycle, the SDLC. And, their CEO, Needham Rakesh, he basically said their early adoption of AI solutions positioned them well. They can help clients get efficiencies, save costs, speed up their own business, and that's reflected in the record TCV.
Makes sense. Connects the strategy to the results.
Yeah. And regarding the risk you mentioned, while the AI landscape is evolving incredibly fast, Emphasis seems to be positioning itself not just as, here's some AI tech, but more as a partner in the whole transformation journey.
Right, focusing on the outcome.
Exactly, focusing on tangible business outcomes for clients, savings, efficiency, growth. That probably helps mitigate some of that risk rather than just selling like the latest shiny AI tool.
Okay, these numbers are compelling. The strategy seems clear. Can you give us some concrete examples, like what kind of deals are actually making up that record $760 million TCV,
Right.
especially the ones using AI?
Absolutely. So that $760 million TCV, it includes 4 large deals. 3 of them are over $100 million each, and 1 is over $50 million.
Okay, so some significant wins there.
Definitely. And connecting this back to the bigger picture, they're heavily focused on helping clients with cost takeout, efficiency, and vendor consolidation, often using AI to do it.
Right, using AI to achieve those classic goals.
Precisely. For instance, there's a leading asset services firm. They chose Emphasis to transform their wealth and investment management engineering platform support. And the key phrase they used was using AI for savings-led transformation.
Savings-led transformation. That's interesting phrasing.
It is, isn't it? It's almost like they're pitching, look, we'll help you find the money to pay for our services by making you way more efficient first.
Huh, yeah, that's a pretty compelling pitch, I'd imagine.
You'd think so. What other examples really show this deep AI integration?
Well, another one is a large North American life insurance company. They picked Emphasis as their sole provider to consolidate their ADMS vendors. ADMS being application development and maintenance services.
Sole provider. Okay, so consolidation is key there, big time. And this deal involves deploying their Neo suite of AI platforms. The goal is managed, outcome-based delivery, and again, significant savings.
It sounds like they're offering more than just a point solution for AI, then. It's like a whole platform approach.
Right.
How does that comprehensive platform approach maybe differentiate them in these big, complex deals?
Yeah, I think that's a crucial point. Their Neo suite isn't just presented as a collection of tools. It seems designed to provide more end-to-end outcome-based solutions.
Right.
And that allows them to potentially commit to specific savings targets or efficiency gains for the client. That could definitely differentiate them from competitors who might offer more sort of piecemeal AI solutions.
Makes sense. Any other examples?
There's a large U.S. financial services company they partnered with. The goal there is enhancing liquidity management. They're using intelligent forecasting, anomaly detection, automated decision support.
Okay, core financial operations stuff.
Exactly. An emphasis is handling the integration, data migration, workflow customization, the whole AI setup to make that happen.
Right.
And one more, another financial services company engaged them for automating API discovery, optimizing routing, detecting integration issues early, essentially setting up an API factory for standardized, reusable APIs.
An API factory. Interesting. So building blocks for future development, too.
Seems like it. And what's really important to note across these wins is that 82% of this new TCV is in what they call new-gen services.
82%.
Yeah, meaning they're focused on advanced, often AI-driven, future-oriented solutions. It's not just about maintaining old legacy systems anymore.
That figure, 82% new gen, that feels like a crucial insight. It suggests Emphasis isn't just winning more deals, but they're winning the right kind of deals, wouldn't you say? The ones at the cutting edge.
I think that's exactly right. These are the deals that will likely define the future of IT services and potentially command higher margins in the long run. It's about where the market is going.
Okay, so we've seen the impressive AI numbers, the specific deal wins driving that TCV. Let's zoom out a bit now. Where exactly is this growth showing up? Across their global footprint, within their different business segments.
Right, good question. You can see the momentum across several key areas. Geographically, the Americas region improved sequentially by 3.2%.
Right. Decent sequential pickup there.
And they say that's driven by ramp-ups in some of those recent large deals we talked about.
Makes sense. The TCV starting to convert to revenue.
Exactly. And then looking at segments, their application segment, APPS, that grew sequentially by 3.6%, again with project ramp-ups showing an uptick.
Okay. And what about the industry verticals? That's usually where you see the specific client demand play out.
Yeah, and here it's quite strong. Key verticals like banking and financial services, BFS, insurance, and also technology, media, and telecom, TMT, they all showed really strong growth. We're talking over 20% year-over-year growth in direct revenue for each of those.
Over 20% YoYIs in BFS, insurance, and TMT. That's significant across multiple core areas. What's driving that specifically? And, to balance the picture, are there any verticals or geographies where they're maybe facing headwinds or where growth hasn't quite met expectations?
Good point. So for BFS, the growth was apparently fueled by gaining more wallet share with existing clients, plus new wins and new accounts.
Okay, a mix of deepening and widening.
Seems so. For insurance, the growth mainly came from ramping up those recent large deal wins we mentioned.
Right, the pipeline converting.
And TMT saw continued wins and that conversion driving its revenue growth as well. So, yeah, really strong performance in their core areas.
Okay. Any weaker spots?
Well, there is one noteworthy point. Their logistics and transportation vertical was impacted. They said it was due to a customer-specific investment slowdown.
Ah, okay. So maybe not industry-wide, but one large client pulling back.
That seems to be the implication, but importantly, they explicitly state there are significant new deals in the pipeline for this specific area.
Okay, so suggesting potential for recovery down the line.
Exactly. So while one area faced a perhaps temporary dip, the pipeline suggests it might not be a systemic issue for them in that vertical.
Got it. Okay, so moving beyond the top-line performance, how robust is their overall financial health? And what other strategic investments are they making, to position themselves for the future beyond just winning deals?
Well, looking at profitability, their operating margin remained pretty stable at 15.3%.
15.3%. And how does that compare to their targets?
It's right within their stated target operating margin band, which is 14.75% to 15.75%.
Okay, so hitting their profitability goals.
Yeah, which indicates pretty strong cost management, especially considering they're also investing significantly in these growth initiatives like AI.
Right, balancing investment and margin.
Exactly. And speaking of investments, they've also been active with acquisitions. Back in October 2024, they acquired EDZ Systems for its cybersecurity business.
Okay, cybersecurity, that makes sense with all the digital transformation.
Definitely. And then in February 2025, they bought TSQ's Inc. for its software testing business.
Software testing.
Yeah, and these don't seem like random purchases, right? EDZ Systems directly strengthens their cybersecurity capabilities, pretty crucial as AI integration potentially expands data attack surfaces.
Good point.
And TSQ's Inc. boosts their software testing, which helps ensure the quality and reliability of all those new AI-driven platforms they're building and deploying.
Right, ensuring the new gen services actually work well. They seem like pretty synergistic moves complementing the core strategy.
I'd agree. They fit the narrative.
So that covers some key acquisitions from late last year and early this year. But the company hasn't stopped there, right? What about even more recent strategic investments or shareholder actions?
Correct. Just recently, actually, in July 2025, they entered into a stockholders agreement to acquire a 26% equity stake in a company called Alka Inc.
Alka Inc. What do they do?
It's for $4 million, and the idea is that this stake will help generate customer opportunities, specifically with Global Capability Center end customers.
Global Capability Centers. So like the large internal IT or shared service units within big multinational corporations.
Exactly that type of customer. They also have a framework agreement in place to acquire Locate Software Inc.'s digital transformation business for about $8.4 million. Though they note that closing conditions are still pending for that one. But still, these recent moves suggest they're actively looking to expand their reach and maybe their service offerings into new customer segments.
Interesting. And anything on the shareholder return front? Dividends.
Yes. The board approved a final dividend of $57 per equity share for the fiscal year that ended back in March 2025. And that was approved by shareholders just a few days ago on July 24th, 2025.
Okay, so returning some value to shareholders as well. It seems like they're navigating the current market challenges while also making these smart forward-looking investments. So looking ahead now, what does Mphasis see for the industry as a whole? And how are they positioning themselves for future growth based on that vision?
Well, they certainly acknowledge the current environment. They talk about continued volatility and lack of tailwinds in client dynamics.
Yeah, we hear that a lot across the sector.
Right, and that decision cycles still elongated due to uncertainty. Geopolitics, cyber concerns, those also continue to dominate client conversations, apparently.
Not surprising.
But on the flip side, they see an extreme appetite for AI-led tech solutions. That demand is clearly there. And they also point to a shift towards services as software.
Services as software.
Yeah.
What exactly do they mean by that?
It sounds like the idea that the delivery of IT expertise is becoming increasingly productized and automated, almost like a scalable software offering itself, rather than purely a manual, people-based service model.
Hmm. Interesting concept. Recalibrating the traditional IT services model.
Exactly. It really paints a picture of how quickly companies are having to adapt, Just a few years ago, AI was maybe mostly R&D, and now, like we're seeing here, it's the core of multi-million-dollar deals and even entire business
It's a
units.
fascinating acceleration, isn't it?
It really is.
So they're keenly aware of the challenges, the uncertainty, but also this immense opportunity that AI presents. How do they plan to capitalize on that specifically? Are there particular competitive advantages they feel will help them keep this momentum going?
Well, they're quite bullish on their own prospects. Mphasis actually expects to grow at approximately 2x industry growth.
Twice the industry average. That's confident.
It is. And they say that's supported by their strong Q1 performance, obviously, and the steady conversion of that big TCV pipeline into actual revenue. They foresee a steady ramp up of large deals in ongoing quarters.
Okay. Is there any external validation for this confidence, analyst ratings, that sort of thing?
Yes, quite a bit, actually. They highlight numerous analyst recognitions. Gartner mentioned them in market guides for things like U.S. healthcare provider credentialing and quality engineering services.
Okay.
Forrester featured them in the AI technical services landscape for Q2 2025. Everest Group recognized them as a leader in areas like group life insurance tech and BFSI IT services specialists.
Leader status. Okay.
And also a major contender in things like intelligent process automation, IPA, talent readiness for next-gen apps, and Microsoft Modern Work Services. HFS also placed them well for insurance services.
Wow, that's a lot of third-party recognition across key areas.
It is, and being recognized by these influential analysts isn't just about getting accolades on a slide. It really validates Mphasis' strategy in these critical areas like AI, healthcare, insurance, BFSI.
Right, it provides that third-party credibility.
Exactly, which is invaluable when you're trying to secure those future large deals and cement your reputation as a leader in this evolving market.
Absolutely. Well, we've taken quite a comprehensive deep dive into Mphasis' Q1 FY26 results today. We've seen how their strategic focus, particularly on AI, seems to have led to those record deal wins and pretty solid financial performance, even, amidst a volatile market.
Yeah, it really feels like they're not just talking about AI. They're actively showing how it translates into tangible business growth and, importantly, significant client transformation.
Indeed, their strong performance really does underscore the impact of maybe being an early mover and deeply committing to AI as a core differentiator in this whole space.
Couldn't agree more. Seems to be paying off.
So thinking about that bigger picture, Mphasis' success highlights this fascinating shift in the IT services industry, moving towards that services as software idea and really the recalibration of traditional people-based models by AI. What do you think this fundamental change means for other industries beyond just IT services? And how might it reshape the way companies, perhaps companies you work for or invest in, approach technology adoption and efficiency in the years to come?